personally really excited about this one. Going to be moderated by Mr. Nolan Bauerle, one of my personal teachers on my Bitcoin journey. Of course, we worked together back in the day at CoinDesk. He's going to be talking to you about the product market fit for Bitcoin. Of course, Bitcoin, an invention we're still learning about, still discovering, and the market is still trying to figure out how to get its mind around it. We're going to hear from Nolan, and he's going to be joined by a special guest. So let's hear it for them, Philippe Bekhazi, CEO of XBTO. And then we've got Nolan Bauerle, author of the forthcoming book, The Satoshi Wedding Murders. Nolan, take it away.
No more fist bumping. Fist bumping's done. We're back to handshakes, everyone. So it looks like Bitcoin has already found a bit of product market fit, wouldn't you say? We've got some fit, it's happening. But today we're going to talk about some of the cutting edge product market fit instances around Bitcoin. And luckily we've got Philippe, who has sort of seen this over the years. And I'll start with a little bit of a frame that, in my opinion, we can tell product market fit, not because it's a good idea, not because the math works out or the projections work out. We know we have it when people physically move to do something. Now, it looks like a lot of people physically moved to come here, so this event certainly has product market fit. But in the actual world of the markets, and with how Bitcoin's performing, there's all kinds of instances. And Philippe has seen the data, he's seen people move, he's seen people buy, he's seen people sell. From the very beginning, he's seen all of that. So I want to get started with a question around liquidity. Liquidity didn't really exist in the early days, right? There was not a lot of liquidity. What was the first time you said there's product market fit for liquidity amongst institutions, that these large buyers would come? So what did you see, how did you see it, and how much energy and enthusiasm did it give you?
First of all, hello Miami. I'm glad to be here in person. So much energy. I'm really pumped for the next couple days. It's going to be amazing. So we at XBTO, I'm the founder and CEO of XBTO. I started in Bitcoin about 10 years ago, but I didn't find a business fit until 2015, early 2015. And our background was institutional hedge fund trading and derivatives. And we had developed a lot of algorithms to basically trade on multiple exchanges bilaterally, but also on exchange. And we wanted to basically use some of our knowledge in crypto. And so in February 2015, it was still very much the early days. I didn't believe that it was necessarily going to go up as fast as it did. It was difficult in the beginning to figure out who were the natural buyers, who were the natural sellers. Obviously, miners are usually natural sellers. But when we started out, things were kind of broken, right? Exchanges worked, but not really very well. Liquidity was really sparse. And we were like, how do we make a market without getting run over, right? And so it was a small ecosystem, and still is a small ecosystem. Most people, obviously there's a lot more people, but most of the core still knows each other, and the players have changed. But that core is still very much in contact and keeps that ecosystem going. So when I started making a market on one exchange in New York. And then by the end of 2015, we were on 5 or 6 exchanges globally. It was a global thing. There were onshore exchanges that were just starting, trying to figure out how to get regulated. And then there were the offshore exchanges just gunning for it. And the way we found people to trade with was through, first of all, exchanges, right? You would talk to an exchange, they would say, hey, you need to talk to these guys, right? They're pretty big, they're starting. No big player known, right, were there at that time. I mean, it was still ultra high net worth, family offices, large traders that had sort of like gotten, went down the sort of Bitcoin rabbit hole and became really interested in it and so passionate about it. And so, some of these startups, we were introduced to one another. We're like, how can we make a better market? Which exchange are you trading on? What can we do bilaterally? Which products make sense, right? So we were very early in the spot trading. We were very early in relative value basis trading in futures, in exchanges that were mostly in Asia, of course, because the CME and the CBOE and ICE and all these sort of regulated onshore exchanges came later, right? In later 2017, and we were already doing that in 2015, and the market was absolutely crazy. The sort of volatility, not only a volatility from the market, but the technology kind of would break at the worst possible time, and you'd have to move collateral, and you didn't really know if you were liquidated, and sometimes the exchange would break, and you didn't know if you were like, your hedges had gun taxes on you. You didn't know, you were like, okay, well, I'm long a future here, I'm short the spot here, and I don't really know what my position is because this exchange, we don't know if it got hacked. There was so much FUD, there's still a lot of FUD, but it's a lot, it's gradually gotten a whole lot better. There's much bigger players now, and there's going to be a whole lot more bigger players.
So in that relationship, you had counterparties basically lining up, and then they're trying to solve problems together in a sense because the venues to solve those problems, or at least to get to the outcomes that they wanted, didn't exist. So what were the kind of places that people would go at that time to solve these problems? Was it, just the ones that were able to complete the trade and make the market? That was good enough at the time?
Yeah, I mean, at the time, it was, you worked with what you had, right? There was no path to success in providing liquidity. Some things made sense, some other things did not make sense. What was simpler back then in 2014, 2015, is that the universe of coins was much smaller, so at least you didn't have as much noise. And I'm saying that it's all noise, there's a lot of signal. But it was mostly Bitcoin and Ethereum just started up, and then there was the whole Ethereum Classic, and there was a whole lot of forks. But yeah, we would meet in 2014 at like Bitcoin, and Bitcoin 2014, I think it was inside Bitcoin in New York, and it was a Javits Center, but it was like a small room with about like 50 or 60 people. It was incredible. And you'd meet everyone, and you know everyone, and you'd be, what are you working on? What can we do to make this space better, right? So that the next generation can actually buy Bitcoin without having to slip through an order book 10% and be like, or make scams a little less prevalent.
Let's go into that and talk about product market fit there, because you said you were making markets just in spot, right? And that had its own limitations. When did you know that the derivatives market was going to have such an uptake to the point where it's grown that volumes are, of course, larger than spot at certain points? When did you start seeing the product market fit for these new derivatives contracts that came out? And what was luring more of these counterparties to come to see these sophisticated, bespoke contracts and markets that were being made?
Well, you know what? Actually, we did not know, and XBTO has always tried to be first. We were first on CME block trades, on ICE block trades.
Yeah, you did the first ever trade on the CME futures contract. I remember that.
We had no idea if that was going to stick. We were the first on options. We were an early investor in Deribit. So, and in the beginning, there was not a whole lot going on. We basically were 90% of the flow. But what the important thing is that we came from the traditional world, and we knew the importance of derivatives in a market, right? Spot's important, but I'm so happy that we have options today because I can actually hedge my risk a little bit more precisely now, right? And back in 2017, there was no deep option market. You couldn't really do it bilaterally because you couldn't figure out the margining, you couldn't figure out the clearing, you didn't really know if the counterparty was really solid. So it was much more difficult. Now, you've got real players that are providing real stability, real clarity, and you can actually if you have a doubt, you can go and say, I'm not really sure this market's going to keep going up. I'm going to buy some puts here. I can protect my portfolio a little bit. We didn't have that back in 2017. So this is providing stability. It's providing more liquidity, because then it provides other reasons to trade the space, right? So derivatives actually provide more liquidity, both in Bitcoin and in all of the other tokens. Obviously, in the other tokens, there's less of a market, less futures, and even less options.
So we see this sort of, let's call it canvas size, or the ability to express your strategy has become much more fulsome. There's way more ways to express your strategy with precision. Where is that headed? What do we need in order to have even more canvas size and expression for strategies on these platforms? What's missing?
Oh, things like credit default swaps. If you're really going to push it, at some point it's going to come. I think insurance, generally, CDS and insurance kind of goes together, right? All of this is going to further stabilize the space, provide more confidence for the pension funds and the banks, and they're coming, but they need all of these things to be comfortable, right? They want to be able to work with players that can demonstrate that they have a certain amount of insurance on their AUM, on their assets, because in Bitcoin, not your keys, not your Bitcoin, right? And so the minute you start trusting someone with your Bitcoin custody, I mean, if something happens, you're really, there's nothing you can do. Really, there's nothing you can do. So insurance is important. Now, we'll have to see how insurance provides enough coverage, because Bitcoin is so volatile and it is on such an upward momentum. How does this go together? And so I think there's going to be Bitcoin-based insurance products that kind of have to go up in
So more products
steps.
coming that are a function of the volatility and the ability to maneuver that type of volatility.
Yep.
Correct? So, but it isn't all just about the products that can come from volatility, of course, right? There are products that are designed to work alongside Bitcoin, like stablecoins, that help us deal with the volatility a little better, even on the consumer side. So where do you see stablecoins really finding product market fit in Bitcoin beyond just the simple long Bitcoin trade that you can use stablecoins to move in and out of?
Yeah, so stablecoins provide an interesting utility. But back then in 2017, the beginning of 2017 and 2018, it was only about $1.5 billion worth of stablecoins, right? Today we're at over 100 billion, right, of stablecoins. Not only Tether, but USDC and Paxos and a lot of different sponsors. Other currencies are coming and becoming available. A little bit of slower adoption there. But stablecoins provide that during 2018, that sort of refuge, right? That way of saying, I've got to pull out a little bit from the crypto native tokens that are extremely volatile and right now going through a phase, but still stay in the crypto world, because the utility of a stablecoin is it's first of all, it's kind of a bearer asset, right? You can move it very easily, everywhere, anywhere, fairly cheaply, and efficiently and immediately, right? And so that's really important when you're trading, first of all. Now you've got you can earn yield on these stable coins, because $1 in a stable coin is worth more than $1 in a bank account, because it's more movable. You can move it faster, you can do more with it. There's more flexibility to it, right? So now you have products that have done extremely well in the last 18 months, right? In terms of earning yield on stablecoin, but also on Bitcoin. And that's really important. Now, payment is sort of the third thing that has been done. Of course, there have been payment companies. The problem is, blockchain has had trouble scaling, and you don't want to pay $3 for a transaction when you're buying a coffee. It does not make sense. You don't want to wait 10, 20 minutes. You don't even know when the finality of a transaction is going to be. That does not work. But for me, trade, earn, and pay is that third utility that's going to come, that's going to be very, very powerful. But it's still sort of being figured out. And you're seeing it. A lot of the big players are rolling out their payment capabilities, their debit cards. You know, the debit card is just a bridge to get you there. But eventually, the idea is, why pay 3 or 4%, sometimes 5% in places like Bermuda, where things are pretty insular. You don't really have a lot of payment options, and they're very expensive. It's almost like confiscatory.
Yeah, I'm glad you brought up Bermuda, just because I think of these countries, and you can see a bit of that product market fit with the way countries are adopting, or at least being open to these currencies. And Bermuda has been one of those great examples of having its mind open to this. And you see a flood of people physically moving there. Of course, the famous Bermuda Shorts picture of CZ years ago. You know, what do you see with these countries and their ability to help Bitcoin find product market fit by being so open-minded?
Bitcoin is sovereignty. You know, when you are a smaller country and you're trying to protect your sovereignty, or trying to protect how to stay relevant in a world that's changing rapidly, decentralization is very powerful, right? So I think we were very early in Bermuda, and we helped shape the regulation over there, and we made a commitment to move to Bermuda to actually build Bermuda to be ready for the sort of next century, because we really believe that things are definitely going to change from a very sort of centralized approach, government and currencies, to something that's much more democratic, earned by the people. And I think these smaller countries, these offshore jurisdictions, are perfect places to do this, because you can really have an impact. You, as an individual or as a company, you can really have an impact on these emerging jurisdictions, right? Because you can talk to the regulator, you can talk to governments, you can.
Their sovereignty
you can educate
is
them a little.
Yeah, it's
easier
more similar to the sovereign individual.
Here, where it's multi-agencies. They don't really talk to each other. You're trying to figure out where you're regulated. You know, FinCEN and SEC and CFTC and this and that, and state. New York. DFS. It's complicated. New York's complicated. U.S. is complicated. So yeah, Bermuda is or Cayman and some of these emerging jurisdictions are really interesting in that, in this new world. You were mentioning about, you've got, let's call it, you said the trade, earn, and pay, right? You can think of the uses of money as, savings, which is sort of like earning in a sense, right.
Trading, investing in a bit of a category, using, there's all kinds of uses for it. The other one I would see is, let's call it sharing, which is lending, borrowing, in a certain sense, crowdfunding, right? That almost fills the complete circle of a financial life around a person who needs to use these tools. What do you see in that other category of sharing, right? The ability to invest in crowdfunding platforms, or in these different collateralized lending tools, and the P2P lending and borrowing. Is that an area you see a lot of growth potential for product market fit in the short term?
Well, 100%. I mean, disintermediation is very important. It's actually the whole point. And we've seen it through ICOs, seen it now through sort of next cycle with DeFi. You feel like you really own your money, right? When before you had it in the bank and you really couldn't do a whole lot with it, you had to rely on financial advisors. You couldn't really get access to the next big thing because there were gatekeepers. Now you feel like if there is a project out there that makes sense, and you're fast enough, you can go direct, right? The crowdsourcing is really powerful. We had crowdsourcing before, of course, but now we're really taking it to the next level, right? So I think whether it's in Bitcoin or a stable coin based on a dollar or a euro, it's all sort of the same thing at the end of the day. Some makes more sense with stable coins, other with Bitcoin. But yeah, I mean, sharing economy is definitely something that is sort of the undercurrent, right? It's basically what is going to bring us to the next, to the next level of serving the underbanked, serving the unbanked, and potentially unbanking the banked, right?
Yeah, I never heard it put that way. Unbanking
Right?
the banks.
I mean, but I think that for personally, I barely have any dollar in a bank account. I really don't. It's mostly I'm really all in this space. So we've been for a long time.
Well, and that's kind of showed, I think people, what you mentioned before with the bank, you gave them your liquidity in the past. Maybe an advisor would help you, their best, I suppose. But really they were trying to get you to be a long-term subscriber to some loan or mortgage. So the ability to express yourself with your savings was limited to the products that they were offering you, which were good for them, because that was their own ability to take short-term deposits and offer long-term loans. They were performing the maturity transformation themselves. Would you say that with Bitcoin, we found a way, when people say be your own bank, it's more like, why don't you adopt the bank's business model for yourself, where you can actually put money in places in the short term and take money out in the long term? Is that a frame that you would use to try to determine product market fit? Are you saying when people are being their own bank, it's not be your own safety deposit box. It's use all the terms that a bank uses to express itself and make money, but now you can do it. You don't need all these other pieces that the bank fit in. Is that a frame you might use, or do you think that way when you're thinking about the customer, the counterparty, the client?
Well, I think the sort of structure, the whole infrastructure, the framework is changing, right? The word bank is sort of a legal term, in a lot of ways. You want to be able, in the future, you probably want to be able, and I'm not saying you should self-custody, because self-custody brings a whole lot of risk that most people, I'm going to say 99%, should not probably take. As the risk of loss is real on these bearer assets. But I will say that with the right counterparty and, sort of the whole 20-80, where you have 80% in cold storage, whether it's with a counterparty or not, and 20% that you use to do things, payments, and potentially, trading, that makes sense, right? So you are your own sovereign financial advisor, bank, whatever you want to call it. That's the whole liberation. That's the whole freedom that this space brings you, and you should embrace it. I think everyone should embrace it.
Yeah, because it's not really about, like I said, self-custody is not synonymous with being your own bank. It doesn't mean you just hold it, right? It means that you're able to find ways to make money and increase your net worth.
Yeah.
So along those lines, you guys do also focus on some of these venture plays and let's say seeding some of these companies in this space. Is there something that you're looking at there that is particularly strong, where you think product market fit is going to be found that really helps an individual increase their wealth? Is there some project that you see right now that people are going to flood in when this thing is offered to the public?
Obviously I'm biased in many ways because we look at the world in a certain way, and obviously we've been progressing naturally. I think blockchain is evolving. Ethereum is going through a major change, potentially major change in July. We'll see how that scales. There are other blockchains that are sort of better suited to do certain things. Again, I think we go back to the trade, earn, and pay model. I think one of the companies that I'm sort of pushing right now is a company called Stablecoins, which is based in Bermuda. It's leveraging Bermuda's sort of regulatory framework. And we want to be a place where people can trade if they want to trade a certain asset, earn on that particular asset, and use it to pay, right? Because you want to have the ability to use those crypto assets most efficiently, right? It's not only meant to go YOLO and on an exchange 100x, right? That sort of was like what we needed this to build the liquidity, to build the value, to know what the value of a coin sort of is at any point in time. There's enormous amount of liquidity and volume, and that's really important. And that basically supports sort of the security behind Bitcoin and Ethereum. Because, yeah, there's mining, proof of work, maybe sometimes future proof of stake, but the liquidity is very important because network effects relies on enormous amounts of liquidity and a good amount of hashing power, right? Put two together, and then now you really have the ability to understand what your stablecoin is worth, should be worth one, but you know the market is telling you what it's worth, and it's very, very deep. And Bitcoin is the same way, right? So I think stable houses, when we get to pay, and right now the trade is sort of in beta. Earn is launching in about a month, and payments is definitely coming, and we're going to make sure that we're going to be leveraging DeFi in the back end as compliantly as we can, because DeFi obviously is still relatively new. It's difficult to understand for the layperson. It's rife with risk, smart contract risk all the time, but it's going to grow up. So much like everything. It's going to grow up, and it's going to change everything. And we want to have stable house that help in sort of being that guide. So be the guide. Educate.
We look forward to people physically moving and buying all kinds of stuff with stable coins, consuming, investing, and the world is their oyster.
100%.
Great.
So excited.
We're getting kicked off stage, everyone. No more product market fit talk. Thanks for your time.
Thank
and
you
please,
so much.
everyone, thanks for Philippe.